It's actually interesting that you've asked about the next 8 years. And I think that's a very good timeline and window and reflection of the reality of how the infrastructure sector works and how long it can take for some infrastructure investments to pay off. I'm sure you know, the bill that was just passed was a 5-year bill, which basically doubled the federal component of their contributions into the infrastructure sector, from what would have been about 700 billion if we had just stayed going at the current pace over the next 5 years, to about $1.2 trillion. The longer answer is a little bit more complicated. And I think it's important to go into that answer in this case because the US infrastructure market is probably the most complex infrastructure market in the world. The US generally spends about $1 trillion a year on infrastructure across the public and private sector. And in the US, the private sector plays a much more important role than it does around the rest of the world. We've privatized, which in most of the rest of the world are actually public assets. If you think about the amount of money that the federal governments are increasing, it's really only about a 10% increase in overall spending in each year. And that money is going to have to be financed by borrowing. And that borrowing is going to have to be paid back over time with interest. So there's a lot of concern about inflation with all the money that's being spent right now. But what I would say is that in the case of the infrastructure bill, what we're spending the money on are long-lived assets. Assets that are an investment in the productivity of our people and of our overall system. And so therefore, if you're going to be borrowing to spend money on anything, you want to be borrowing to spend money on things like this, because those things tend to pay off, particularly in the very low interest rate environment that we're in right now. I mean, I think that's a really excellent point. And the CARES Act, I do think, was a relatively unique situation, but it definitely did point out a couple of things that are weaknesses in the system for people to respond quickly to the receipt of significant monies. And I think in infrastructure, much like what was happening in the CARES, we've got a very similar role between the federal and the state governments. As you probably know, the federal government doesn't actually own a lot of infrastructure. It really just contributes money, but the state and the local governments are the ones who own the infrastructure. They make the decisions around what's going to get built, how it's going to get built. They're responsible for operating and maintaining it. And they also pay the lion's share for it. In the CARES Act, they were trying to repurpose a lot of other systems that weren't really fit for purpose to get money out to people. So the unemployment checks that came through, other things like that, those all went through the state unemployment banks. And they weren't necessarily set up to take a fixed dollar amount check for every unemployed person and add it on top of, a highly complex calculation that was going on in their systems. So they had to rejigger all of their systems. They had to do a lot of things that were difficult. And to the extent that you've got new programs that are getting set up for this, there may be some of that. There'll be some of that at the federal level. There'll be some of that at the state level. But in this case, I think most of the money is going to end up going through existing systems. And therefore, it should be hopefully able to be handled much more efficiently. So, for example, in the case of the transportation money that'll be coming out, most transportation money that goes through the DOT is handled through what are called, formula grants or other formula programs, where they distribute the money based on a formula that usually involves, population, lane miles you have, the amount of trains you have, airports, all those other things that are in the transportation system will be involved in the various formulas that you get money. They're also very familiar with all the requirements that are going to come with federal money, Build America, Davis-Bacon, reporting requirements to make sure that you've spent it on eligible costs and other things like that. Their biggest challenge is going to be, okay, we've got more money. How do we accelerate projects that we've got? And I know here at Rebel, we've actually got some clients who were in the middle of setting up their projects, and now they are they're slowing down their planning to make sure that they understand how much money they're going to get in order to from the infrastructure bill in order to move their capital plans forward. I think the biggest challenge is when jurisdictions are going to find that they have new programs to apply for, new monies coming in, and then they're going to run into all the problems that we always run into when we try to push a lot of more money through the infrastructure system, which is that it takes a long time to permit projects. It takes a long time to plan projects, to get them into the capital plans, to get the permits drawn, to get the designs done and approved, to get the environmental done. Maybe some of the biggest challenges that they have in public-private partnerships and other innovative procurement methods that bring a little bit more accountability and a little more cost certainty because of the nature of fixed price design build contracts and things like that. We saw the push for P3s and innovative things. They've been going on for a while, but there was a big push that got started in the Bush administration. And then that got continued in the Obama administration. And they created the ARRA, and we tried to push more money through the system. And what we learned during that administration was that our big problem wasn't actually money, it was permitting. And it was how long it takes us to permit stuff. And so the Trump administration came in and they were going to spend a ton of money. And then they realized the lessons that had been learned in the Obama administration. And they actually tried to tackle that, tried to tackle the permitting and speed up the federal role. And what I really hope we do, though, is we spend some time after this first push over this year thinking about how can we make the system more efficient and how can we help these things happen more quickly so that when we do have more money to spend on infrastructure and want to get it done more quickly, we've fixed some of these fundamental problems that just throwing money at the problem doesn't fix. You know, there are some aspects of the New Deal in this, but I certainly the scope of it is not the same thing. If you combine it with the Build Back Better bill, I think you're starting to look at something that's a little more like the New Deal. But this infrastructure bill, it's not even as bold as, say, the Eisenhower interstate highway system, but it's hitting on some really critical things. It's hitting on next generation infrastructure. It's hitting on renewables. It's hitting on broadband, which is clearly the infrastructure that we have to be getting to people to make sure that we've got an equitable society, to make sure that we're giving chances to everybody economically, because this is going to help. It's not going to fix everything. One of the things that happened with the ARRA was started up in the next year or so are things like filling in potholes, fixing roads, fixing and reinforcing rail lines, just the basic catching up on deferred maintenance that needs to be done in well-developed urban areas. And your best bang for the buck is actually resurfacing roads. Cars from losing tires, it lets traffic flow freely, if anything. So I think those types of projects are going to start up right away, hopefully have continued impact on our economies, regardless of what happens with inflation, with other things like that. We're building the right framework and foundation for our economy to continue to grow, regardless of the ebbs and flows of economic activity that always happen.